Good afternoon, ladies and gentlemen. This is Lizanne, the moderator for your conference call. Welcome to the Vodafone Idea Limited conference. For the duration of this presentation, all participant lines will be in the listen-only mode. After the presentation, a question and answer session will be conducted. We have with us today Mr. Ravinder Thakkar, MD and CEO of Vodafone India Limited, Mr. Akshay Mundra, CFO of Vodafone Idea Limited, along with other key members of the senior management on this call. I want to thank the management team on behalf of all participants for taking valuable time to be with us. Given that the senior management is on this conference call, participants are requested to focus on the key strategic and important questions to make sure that we make good use of the senior management's time. I must remind you that the discussion on today's call may include certain forward-looking statements and must be viewed therefore in conjunction with the risk that the company faces. With this, I hand the conference call over to Mr. Ravinder Thakkar. Thank you, and over to you, sir.
Thank you, Lizanne. On behalf of Vodafone Idea, I welcome all participants to this earnings call. On Saturday, our board of directors adopted the unaudited results for the quarter ending December 31st, 2020. A detailed press release, quarterly report, and unaudited financials have been uploaded on our website, and I hope you had a chance to go through the same. As usual, I will start with discussing our ongoing strategic initiatives along with operational highlights for the quarter. I will then hand over to Akshay to share details on the company's financial performance. Our key strategic intent has always been to offer superior customer experience on both data and voice, which will help us drive better 4G additions and consequently improve revenues, profitability, cash flows, and our competitive position in the market. Let me now discuss the progress we have made on our various strategic initiatives. The most important initiative is our focused network investments. We continue to have a focused approach to investments, biased towards our profitable areas, and utilize our CapEx effectively while ensuring that we offer superior customer experience in these areas. We are driving incremental 4G investments in our 16 priority circles, which contribute 94% of our revenue and 86% of industry revenue. We continue to add 4G capacity through spectrum refarming in these areas. We continue to progressively upgrade our 3G network to 4G. While our overall broadband sub count stood around 448,000, lower compared to Q2 FY21 due to closure of 3G sites, we added approximately 12,000 4G FTD sites, mainly through refarming of 3G spectrum to expand our 4G coverage and capacity. Our 4G coverage is just over 1 billion of Indian population. Our relentless pursuit to become the best 4G network in the country is reflected in our top rankings across various third-party reports on both data and voice. GigaNet remains the fastest 4G network in the country for 2 consecutive quarters as per report. Based on TRAI's Night Call app data, we also have the best voice quality in the country for the last 3 months consecutively. This is not only providing a great experience for our customers, but also helping us drive stronger network perception, leading to better customer response in the market. While we are currently in the middle of our 4G CapEx cycle, we are deploying equipment which is 5G ready on both radio and core. We have already deployed and are using a range of 5G technology, such as massive MIMO, DSR, Open WAN, cloudification of code, etc. We also have the largest edge cloud deployment in the country. While 5G ecosystem is still nascent, we are well prepared for 5G rollout as and when the ecosystem is ready. The second focus area is market initiatives to drive ARPU improvement. While tariff hike remains critical to improve the overall industry health, we have also undertaken several market initiatives to improve ARPU with a focus on driving 4G and dual plan penetrations. After the launch of our unified brand, we had launched a very high decibel campaign to announce that we powered by Giganet the fastest 4G media on TV, digital, and outdoor media. We have also launched several digital campaigns in IPL, which is a great opportunity to connect with customers, leading to strong engagement and brand affinity. This quarter, we also launched Weekend Data Rollover, an exclusive proposition to carry forward unlimited data from weekdays to weekends on all unlimited packs of daily data. Vodafone Idea continues to aggressively focus on digitization of customer services across all touchpoints. We now have digital acquisition in more than 100 cities for both prepaid and postpaid, including same-day doorstep delivery and digital KYC processes, serviced through our dedicated delivery partners as well as our own stores. The third focus area is business services and new fast-growing segments. Business services remain one of our focus areas where we leverage our multi-year relationship with customers and global strength of Vodafone Group. These businesses continue to lead the growth by partnering with both large enterprises and SMEs in their digital transformation programs, which have accelerated during the pandemic. In new business streams, cloud services remain central to our growth strategy. We continue to maintain a clear leadership in IoT offerings, which have a potential to grow manifold in the near future. We extended our market leadership in IoT in the connected vehicles segment with the launch of industry-first IoT eTrain, the first GSMA certified multi-profile URCC eSIM in the market. It is a game-changing and differentiated solution for automotive and other industries as the multiple network profiles ease the deployment with simple OTA provisioning to reduce the overall cost of operations. Our IoT growth strategy is in strong alignment with the evolving market needs of our customers. In our journey from telco to digital services care, we would be moving beyond IoT connectivity by offering end-to-end IoT solutions enabled by our IoT partner ecosystem. The heritage of expertise and demonstrated success with our customers continuing to be recognized by the industry with CIO Choice 2021 awards. The recognition, this is an extensive pan-India CIO referral voting process that spans across industry verticals and guided by 9-member CIO advisory panel. It's for a range of our products and services. We were chosen as the preferred partner of choice telecom carrier mobile access for 7th year in a row. Managed mobility services, first time nomination and first win. Strong for second consecutive time. And Internet of Things for 4th time in a row. We are also awarded Frost & Sullivan India ICT Best Practice Award 2020 as an end-to-end connectivity service provider of the year. The next strategic initiative is driving partnerships and digital revenue streams. We continue to have several regional and global content partners. We recently added Group Select and Fireworks to our extensive list of content partners, which continue to grow day by day. As stated many times, our strategy and partnership extends way beyond content. We have partnered with various e-commerce platforms, handset manufacturers, financial institutions, NBFCs, among many others, to create value not only for the customers but also for the company and its partners. As we plan the future, we are now focusing on our platform capabilities to offer a deeper integration with our partners for a differentiated experience, create monetization opportunities, and truly become an integrated digital service provider. As a big step in that direction, VIL has entered into strategic partnerships with key players in the area of learning and upskilling, health and welfare, and business health to offer benefits to the new age customers. The company has forged partnerships with Udemy, Pedagogy, Chill.Fit, 1MG, Fine, Unimart, Tumblr, and Cisco, and plans to onboard more partners under each of these areas to enable these users to get exclusive offers from these players. This will help us drive more value for our customers and offer growth opportunities for these businesses. And lastly, we have made good progress on our cost optimization exercise. We targeted to achieve rupees 40 billion of annualized OpEx savings by the end of this calendar year. Several of our initiatives are bearing fruition and are visible in the cost reduction across many of our OpEx line items. As of this quarter, we have already achieved approximately 50% of these targeted annualized cost savings. Now moving on to operation highlights for the quarter. Revenue for the quarter was rupees 108.9 billion, a growth of 1% quarter-on-quarter, aided by higher 4G additions this quarter. As mentioned in our press release, our focus on being the best 4G network, the launch of our unified brand V, has started to reflect in our improving operating performance. With improving subscriber retention, the subscriber base is 269.8 million in Q3 FY21, a decline of only 2 million compared to over 8 million last quarter. Gross additions continue to improve, as well as subscriber churn declined to 2.3% compared to 2.6% a quarter earlier. At the end of the quarter, the 4G subscriber base stood at 109.7 million, in addition of 3.6 million 4G customers. Continue to see healthy traction in 4G UL net additions and remain a key focus area for us. Now a quick update on some other developments. On the ADR matter, following the judgment on September 1st, 2020, we had written to DoT to revoke the preliminary demands adjusted for computational errors, admissible pass-through charges, and payments made but not considered while computing the demand. We are still awaiting response from the DoT. In the meanwhile, we have filed a modification application in the Supreme Court, which is currently pending there. As the matter is sub judice, we will not be able to comment anything further. On Indus Tech, as you are aware, the merger of Indus and Infratel was completed in November 2020. VIL has sold its 11.15% stake for consideration of rupees 37.6 billion and has made a prepayment of rupees 24 billion to the merged tower entity, which will be adjusted in line with the terms of the agreement. On fundraising, our board has approved fundraise of rupees 250 billion through a mix of debt and equity. We are in discussions with potential investors, which are progressing well, and we expect to conclude this exercise soon. Lastly, spectrum auctions are expected to happen in March 2021. While we have submitted our application and will be participating in the auction, we will be unable to comment at this point on our auction strategy, auction renewal, or acquisition plan, given the sensitive nature of this information. With that, I hand over to Akshay, who will share the financial highlights for the quarter.
Thanks, Ravinder. A very good afternoon to participants from India and a good morning or evening as applicable to overseas participants. As mentioned by Ravinder, during the quarter we have seen improved gross additions, better customer retention and higher 4G additions. Resultantly, revenue was up by 1% for the quarter to rupees 108.9 billion as against rupees 107.9 billion in Q2 FY21. Adjusted for Ind AS 116 impact, EBITDA was rupees 21.1 billion for the quarter, positively impacted by rupees 3.3 billion due to amortization of subscriber acquisition costs over the expected customer life. Additionally, EBITDA improved due to higher revenue as well as incremental OpEx savings on account of our cost optimization initiatives. We are working on various cost initiatives to drive further savings and target to reduce our annual operating costs by rupees 40 billion over Q4 FY20 baseline by end of this calendar year. We have made good progress, and on a run rate basis by the end of Q3 FY21, we have achieved approximately 50% of our target cost base. Q3 FY21 CapEx stood at rupees 9.7 billion. Net debt was rupees 1,170.8 billion as of December 20, as against 1,145.1 billion in September 20. Out of this, the debt to banks and financial institutions is rupees 231.7 billion, and the balance is owed to the government towards deferred spectrum payments. On AGR, as Ravinder mentioned in his remarks, we have approached Supreme Court requesting them to allow DoT to make corrections for manifest errors in DoT demands. As the matter is pending hearing, we currently continue to recognize AGR obligations based on the demand figures informed by DoT to the Supreme Court. With this, I hand over the call back to Lizanne and open the floor for questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Kunal Vora from BNP Paribas. Please go ahead.
Yeah, thanks for the opportunity. So first question on tariffs. What's stopping you from raising the tariffs? Airtel has clearly said that they are not going to initiate a tariff hike. So if you can share your thoughts on what will trigger the tariff hike, and if you can update us on the flow tariff, anything which you have heard from you. That's question number 1. So I'll just go through all the 3 questions and then leave it. So second one, can you share your thoughts on 4G services? How long do you expect these to continue, and at what level of revenue contribution you might consider switching it off? And finally, on prepaid customers, postpaid customers, the number is still down about 10%. What's been the reason for this when Airtel is seeing healthy additions? And if you can talk about the impact of MTN, like machine to machine is still hurting the numbers. So that's it for me today.
Okay. Thank you, Kunal. Let me try and for some of the items I will ask Akshay to jump in as well. Starting with your first question, Kunal, on the tariff. I think you said it earlier, and I think everybody in the industry continues to say that the industry needs tariff hike. All players acknowledge that. It's common knowledge that services are being sold well below the cost of capital, and the returns are dismal, in the industry. Now, and your question was about floor price, which is also another way. So one way is to increase tariff hike, increase the tariff, or the other way is for the government to institute floor pricing. As you're aware that the regulator had floor pricing consultation. We are in the middle of that, the change in regulator, the chairman of the PRI changed in the middle in September, just after the pandemic, and things then started to open up. I understand that is new and to how to get out our plans. I think as you would hopefully see and appreciate from where we are as a company since our brand launch in September, we have started to gain momentum and traction in the market. Not only have we launched this unified brand, but overall, you would see across divisions we market on improving. Our 4G subscriber growth, device subscriber growth is starting to grow. My tags are becoming more stable. I can tell you our engagement with customers is improving significantly. And so overall, we see a lot of positive momentum that is starting to take place. And with our fundraising discussions that are going on, we see overall a positive trend within our company. Of course, we've also mentioned that we will not wait for anybody else to join, but we will also raise prices at the right time. And the right time will be when the right time is. I can't tell you that exactly what it would be, partly because I think it will be a competitive issue as well. But at the same time, how much, what time, and so on are things that we will decide at the right time and what is the right opportunity to do it. But we are not waiting for anybody to do this there. And we believe that we are in the best position of the company to raise prices, increase sales, and come up legally take those steps in action. In regards to the 2G service, I think this question has been asked before, but let me say that I think the 2G service will continue to stay for a fairly long period of time. It is not only an example in India, but it's an example in many vastly developed countries where 2G service continue to be a very good and an optimized way of doing some services, not always, some work, but also for IoT and a few other things. And then IoT services, it continues to be a very positive way of doing it. From our perspective, there is no increased cost of 2G service. 2G service is there, it runs, and it's actually very, very effective. What we are doing is on the 3G side, which is the service that we deployed before. We are continuing to shut down 3G services in many markets. In fact, we have shut down 3G in about 100 cities across the country already, and we found the spectrum to use 4G services. And that will eventually happen. I don't expect the 3G services to continue to decline. I don't expect 3G shut down anytime soon. And the last question was around postpaid. I have to say, I'm not sure where the 10% number is coming from. There is a slight decline in postpaid. It's not a significant decline that has taken place in this quarter. We are starting to see positive traction in certainly in the postpaid business. Machine to machine is actually after the pandemic, because in the pandemic, many of the services such as people using for payment machines and so on, those services were not being used for this connected. We're seeing a recovery of that, and we expect the postpaid business to continue to do well. We are not seeing any material decline or a back in that particular part of the business.
Sure. Just a small follow-up on the last one. 10% is a number which I could derive year-on-year, about 2.5 million customer decline. Most of which happened immediately after the pandemic, but that number is not fully recovered. Because at that time, it mentioned that figure is end-to-end. End-to-end should have recovered by now. Just wanted to get some sense, is it that the 2.5 million customer decline which you've seen in postpaid for the last 1 year, is it in the weekly sectors or it's broad-based?
So obviously this is not information that we share, Kunal. What I can tell you is that if you look on quarter-on-quarter basis as you move forward, we are seeing the decline to be much more slower, right? In a quarterly basis. But I can tell you that the positive momentum in postpaid is certainly back, and the machine-to-machine business is also very well recovered after the pandemic. And these are the only details I can give you without going into exact numbers.
And Kunal, if I may add, some of this reduction that you see in postpaid is also migration from postpaid to prepaid because of the price arbitrage.
That's right. Airtel is seeing a healthy addition in last 2 quarters. Will you disconnect between what you are seeing and what Airtel is seeing? That's the question that makes sense.
Yeah, look, I think, we are obviously we're seeing a positive trend, and we expect this positive trend to continue. I guess is the way to describe.
Understood. That's it from my side. Thank you very much.
Thank you.
Thank you. We leave the next question from the line of Vivekanand S. from Ambit Capital. Please go ahead.
Hi. Thank you for the opportunity. I have a couple of questions. One, when would you need to raise capital to meet your own March 22 4G coverage, population coverage target of 1.15 billion? Also, if you could help us with your present 4G coverage in the priority circles. You had said that it was 83% in March 20, and you have targeted that to go up to 90%. Second question is on the recent weekend rollover that you announced, the weekend data rollover. Isn't this at odds with the tariff hike plans that you may have, given that this seems dilutive to the tariff hike narrative as far as the 4G customer base goes? And thirdly, the gap between your reported ARPU and computed ARPU, that continues to widen. So I know that the reported ARPU is computed on services revenue and excludes infrastructure, fixed line and device revenues. But this gap seems to be widening now when I multiply the reported ARPU by 3 times the average customer base, and when I compare it with the revenue number, that gap has. Could you help us understand that better? Thank you.
Okay, thank you. Let me take some time now. I'll ask a couple of them over to Akshay. I think in regards to the factory one itself, because we are fairly well advanced and well underway. We don't really expect any changes to our targets that we had set for March 22 in terms of our coverage and so on, based on where we are in the fundraising process. So no significant change at this point. We don't see that as something that we either delayed or modified compared to the numbers that we shared earlier. On the priority circle, clearly part of the going from 83% to 40% is the fundraising process was on continuing to engage in those circles. I can tell you that we like continue to enjoy a great experience for our customers in those circles. I would say today our focus is very much on maintaining capacity and providing a great experience. Our increase in coverage in those circles will come alongside with the funding that will happen. So they are not significantly different than the number that we have shared with you earlier in regards to our population coverage in those circles. And I think the next question is around the weekend rollover. No, I don't believe that is in cards at all. I think there's a great way in which the customers who have to, that cannot necessarily use this data to use it every time that it's making what is available to them. I think what is actually what we are trying to sort of go towards, which makes much more sense in our minds, is that customers buy a certain amount of data, and they should be allowed to use that certain amount of data within the time frame that they're purchasing for. Actually, the concept of creating this every limit by itself, which was created by some of the competitors, actually is in my view flawed, and it's not the right way. So I think in some ways it is starting to change this in a small way in the industry and eventually get to the right place. It says people buy a certain amount of data, customers buy a certain amount of data. They get to use it whenever they wish to use it, as opposed to if you don't use it today, it gets, let's say, you don't use it, then you lose it. that's really not the right thing. So if you buy a data pack for 28 days, you should be able to use it for 28 days. So I don't think it is at all the tariff pack at all. I think it is providing an experience to the customers and actually meeting their needs, especially after they have purchased the plan that they have purchased. On the third part, actually, I pass it over to you for the reported versus the completed option.
Thanks, Surinder. Vivek, actually, you see, reported ARPU is the correct consumer ARPU. If the divergence is happening as you are calculating, it is because maybe the other streams of revenue, other than the consumer revenue, are going faster. That's the only reason. Now, there could be some minor impacts because the ARPU, I mean, if you use to calculate the derived revenue based on ARPU and number of end of period subs, there may be some difference based on the average subs, but largely it shows that the enterprise revenue is growing at a faster rate than the consumer revenue.
Understood. This is helpful. Just a couple of small follow-ups, data queries actually. Would you be able to help us with how many 3G sites you are still running and the time frame that you are looking at for the shutdown of 3G services? And secondly, in the consumer ARPU, how much is the IUC-related ARPU contribution? That would help us because from the fourth quarter we need to take that into account.
So if I can answer the question, as far as the ARPU question is concerned, generally interconnect is about 10% of our overall revenue, not necessarily of the ARPU, so you can take that as a guideline. So of course, from the next quarter, this revenue will go away. Cost will also go away. So that was the first part. I think in terms of 3G sites, I will not be able to share that data with you, but the direction which we are taking is that 3G is not required anymore. It is being continued only because some people have devices which can be used only on 3G and not on 4G. As and when in a given geography, the subscribers are coming to a lower number, then we are taking market interventions, following up with customers so that we can discontinue. Ideally, we should be done with our 3G closure in FY22, and our intention is to do it as fast as possible while keeping the consumer requirements in mind.
Thank you. Thank you very much.
Thank you. The next question is from the line of PD from Lansdowne Investment. Please go ahead.
Hi there. Good afternoon, and thanks for taking my question. I had a question around your fundraising plan. If you could please share a more detailed update, on why is it taking so long to close? Because on the last quarter's call, I believe it was mentioned that it was expected to close in the coming quarter. And what are the reasons, why it is taking so long, especially given the high level of liquidity that we're seeing in global markets and even some of our competitors being able to raise funds very quickly. And now what is the, expected timeline by when we can, hear some closures on that aspect? Thank you.
Okay, PD, just to clarify, first of all, I don't believe that this is taking an inordinate amount of time. I mean, this is, it takes time to raise funds. I don't know how it can be compared to some of the other competitors who used to have raised funds faster, because I'm not aware of the timelines of how quickly they raise their funds. All I can tell you is that we are very well engaged. There is interest in various participants in helping us with fundraising, and we are very well progressed. Now, when exactly? But now I will shy away from giving you a date because this is something that will happen when it happens. This close, I really don't think there's any point in putting a date to it. We understand that it is important for us. Clearly, as we've shared also plans, so that we are hoping that some of this funding will help us in our CapEx as well as the payouts that we need to do. But certainly, as the question was asked earlier, do you expect any changes in our realized plans based on our current fundraising, where we are, and we said no to that. So hopefully that gives you an idea of how quickly we will be able to raise it. But all I can say is that I don't believe that there's any inordinate delay, and I don't believe that this is something that is now still in its early stage. I think we are at a fairly well developed stage, and the demand continues to be very, very positive.
Okay, so there is clear interest from a set of investors. It is not a question of lack of interest from investors. That's not a cause of concern.
Not a question, yeah. No, there is interest. And of course, until you get the money in the bank, it's all, interest and so on. But I can tell you, I can confirm with you that there's absolutely interest in this in fundraising for our company.
Okay, sure. Thank you so much.
Thank you. We'll move on to the next question. That is from the line of Vikash from SocGen. Please go ahead.
Hello. I think I had the same question the previous person had covered, so I'm good with that.
Okay, thank you, Vikash.
Thank you. We'll move on to the next question. That is on the line of Vishnu KG from JM Financial. Please go ahead.
Thank you for taking my question. Just wanted to know, sometime back we were looking at monetizing the non-core assets like fund and assessment center. Could you please provide some color on where we are in the journey, or is it in the back burner for now? Thank you.
No, I think, Vishnu, our focus very much at this time is on fundraising. And I would say our focus very much actually is on improving and continue to have good operational performance as well as engagement with the customers, which I talked about earlier. That's going well. We are focused on our fundraising, which also, as I mentioned, is going well. So that's really our focus. I don't think we are at this point actively doing any of the non-core asset monetization discussions, because I think it's not the right time to do it. We have done some work on it earlier, but I think it's a bit on the back burner now.
Okay, thank you.
Thank you. The next question is from the line of Sanjay Jain from ICICI Securities. Please go ahead.
Thank you, and good afternoon. A few questions from my side. First, on the digital partnership we are running with various partners. Just wanted to understand what kind of monthly how deep and how strong the relationship we have with them. Number two, on the 5G side, we did touch upon the readiness. It looks like one of your partners is now doing the trial run based on dynamic spectrum sharing, which we have earlier tried, have been actively doing on the 4G side. How ready are we in terms of extending that service even for the 5G, and which are the spectrum band do you think we have enough quantity to provide that service? Number three, more a data point question. What is our EBITDA contribution from IUC that would get knocked out from next quarter? These are the three questions. Thank you.
Thank you, Sanjay. And on the partnership side, I have to say that this is actually one of the very, very exciting areas. As I mentioned, we have actually built on several strategic partnerships in the last quarter. The three areas of focus that we had initially is really on learning and upskilling, health and wellness, and then on business health, which I think are all very important areas, especially given the current pandemic situation and where the economic situation is, because people are looking for learning and upskilling, and of course health is a very critical area. And businesses who are struggling through this pandemic are looking for help, and now they get the digitalization part. And I gave you examples of several partners where we have done work in terms of bringing them on board. Our approach to partnership, just to be clear, something is pretty different. What we are trying to do is to do what we call deep integration, which means that in some ways the benefit of us and the partner coming together is better than and more important than just us being there to contribute some of those services. And sometimes there's deep integration depending on the services, involved more than just us, becoming a reseller. It could involve, could be authentication, could be, other ways in which we integrate the service together. So those things are actually quite exciting and doing very well. But I cannot give you, and I don't think we provide this data, and certainly it's early days anyway to give you the GMV as you talked about. But I can certainly tell you that the response from the market and our customers has been positive. It's too early at this point. It's not something that we disclose anyway. I'm not even sure if we have the authorization to disclose from our partners exactly the value. But the categories of partnerships are very exciting, and we are seeing good traction, and it's really the right time when what's happening in the country at this time anyway. In regards to the 5G readiness, we have always said that our network is very much 5G ready. We are the newest 4G network in the country, and as a part of our deployment, we have continued to deploy 5G ready technologies. I think it's something interesting that, one of the competitors is showing DSR in a lab environment, where we've been running it practically on thousands of sites in a production environment for a very long period of time. So I'm not really sure what the purpose of showing that is, but we have been doing this thing, it's running, it's in production. The technology is the same, whether you use it for 4G spectrum or 5G spectrum, it doesn't really matter. Spectrum is spectrum, it works. So we expect that to actually be most well tested and most tuned in our network. And certainly, when the time is right for 5G, we expect to be in the best position to take advantage of that. So we've not just done GSR, we've done massive mining, we've done clarification of the core, we've done other elements that we've also brought in, which are all, in our view, are very well tested. There's spectrum in 900, 1800, 2500 band as well, both in the TDD and FTD, and all of those places GSR can be used. On the EBITDA contribution, Akshay, over to you for the last question.
Yes, in this EBITDA contribution, which will go away in the next quarter, is about 80 crores on account of interconnect going in.
So 80 crores is a quarterly hit because of interconnect getting discontinued.
That's it.
Yeah, just one follow-up from my earlier 5G question. So when we say DSR, and now that we are using 3G, so that it's dedicated 4G, but and luckily 5G is evolving very strong on 25 megahertz. We have the spectrum okay. Do you think that combination of 1800 and 2500 puts you in a better place for 5G in terms of readiness for the 5G services? And when we say dynamic spectrum, what kind of actually cost is involved in transforming the network from being standalone 4G to a more dynamic spectrum? The 3G, 4G was more a part of transformation and merger. This would be more of a network upgradation. So I think it will involve an incremental cost. So what kind of cost, a ballpark number, or even a direction, it will be very helpful. Thank you.
So, in terms of, first of all, the usage of spectrum, the idea is that we have already deployed DSR, and we are currently using it within our networks. It's mostly being used between 1800 and 900 right now. But there's no reason why it cannot be extended to 2500 as well. The network is already ready. It's a matter of then keeping on the software element, depending on the number of sites that we want to turn that on. And so there's no, for us, given the network is ready, it's a matter of maybe software updates that need to happen. I'm sorry, but I can't give you the cost, one, because I'm not sure if I'm allowed to disclose it, and honestly, I couldn't give you that off the top of my head anyway. So maybe we can have a discussion offline when there is something that is interesting to you, but I certainly can't give you that number.
Yeah, that's great. Thanks for the time and thanks for the opportunity and best wishes.
Sure.
Thank you. The next question is from the line of Gopala Krishna from HNI Investments. Please go ahead. Mr. Krishna, your line is in the talk mode. Please go ahead.
Yes, thank you. Actually, what I would like to request investment is that every quarter there's depreciation and amortization is around 600 crores per quarter is being taken out. And whereas the capex is very, very less, it's around 1,000 crores. So this, I think this should give the Vodafone idea that enough cash cushion in so that we really need the funding for the network upgrade. This is my question. And the next question is, like the subscriber, it's very good to know that in the month of December, it appears that we have gained the customers, it's like losing the customers. Is this trend continuing in January as well? That's all from my side. Thank you.
So, Ravinder, if I may just take the first question and then we can address the second one. So, I think, Krishna, the comparison which you are making between depreciation and capex is generally applied in a situation whereby the DNA is taken as setting aside of profit so that it does not get distributed to shareholders. It is a very different concept. Here we are talking about what is the requirement of the business to grow, and the funding requirement is that. It has really nothing in our context to do with depreciation and amortization. And Ravinder, it's over to you for the second question, if there was something.
Yeah. So the other question on the question of subscriber, as I mentioned earlier, I think we are seeing a very positive trend on subscribers in all metrics, whether it's growth or production in churn and net additions, especially after you're seeing strong on 4G and VI. So all of those areas are going well, and I think the trends are all positive. I can't give you a number, obviously, on January, given that we're talking about Q3 results, but I will say that we are seeing very improved traction in each of these areas, subscriber numbers in general on all metrics.
Thank you very much. Just a follow-up question. I know that a particular number cannot be given. Just a small question is, in January, did we stop losing the customers?
I don't think I can answer that question given the forward-looking nature of that, and it's just not something that we disclose on a month-on-month basis in the details.
Okay, thank you. I appreciate it. Thanks for the opportunity. And I wish you good luck to be the number one operator. Thank you.
Thank you very much.
Thank you. The next question is from the line of Paras from PTC. Please go ahead.
Thank you for allowing me to ask a question. This is regarding what ARPU you are likely to target for the next quarter. Thank you.
Sorry, I didn't catch that. Could you please repeat?
This is regarding what ARPU you are likely to target for the next quarter.
ARPUs?
Yes, ARPU. Yes.
Yeah, okay. Again, I don't think we disclose that number, especially on forward-looking. We have seen now that in quarter-on-quarter basis, this quarter, last quarter, we have seen actual improvement. And obviously, we hope that trend continues, but this is not something that we provide guidance on a forward-looking basis. I'm sure, maybe you want to jump in there and confirm.
No, nothing to add from my side.
Okay, but looking at the capex savings, which we are doing, I think so ARPU will be improved at a greater extent, right?
I mean, just to make the point that capex is diverted towards or it's meant to either expand the coverage of capacity, essentially meant that we can either take more subscribers, which may not result in improvement in ARPU, but if it is directed towards creating capacity so that the subscriber can use more, that can result in a higher ARPU. Thing. As we have said, I think earlier also that currently we have a very good capacity position. which is reflected in the customer experience, which is reported by third parties. So really speaking, at this point of time, CapEx is not a factor immediately, which is impacting the ARPU. We have sufficient capacity to increase the traffic of the existing network to improve the ARPU, if that is the case.
Yes. Thank you very much. That's all my question. Thank you.
Thank you. We'll move on to the next question. That is from the line of Sanjesh Jain from ICICI Securities. Please go ahead.
Thanks for taking the follow-up question. One last thing I wanted to touch upon is the broadband. We have seen competition adding a strong subscriber base. So, understand we don't disclose a lot of information about that, but you can just highlight what kind of customers we are seeing, what kind of a group, and what is the ARPU we are looking at in broadband, and what are the plans around the broadband for us.
Actually, I don't think we disclose any information, but we may wish to add.
Yeah, Sanjesh, so I think we are not giving any separate disclosures for you broadband. All that I can say is that I think in terms of our priority of investment, that is not a priority area. However, I think post the lockdown, we have seen some improvement happening in the performance of new broadband as the demand for these fixed line services has shown some improvement.
Got it, but we are not disclosing even the subscriber number or what kind of ARPU we are doing in the new broadband as of now.
Not right now. I've heard you. Let's see what we can do going forward. That has not been our focus area in terms of disclosure. But since you raised that question, we'll look at that and see what we can start doing next quarter on.
Okay, Akshay. Thanks for taking the question.
Thank you. The next question is from the line of Vivekanand S. from Ambit Capital. Please go ahead.
Hello. Thank you for the follow-up opportunity. Is the entire rupees 128 billion current maturity of long-term debt payable over the next 12 months? It would be great if you can clarify how much leeway our existing lenders are giving us since the industry continues to remain in an extraordinary state of stress and low tariffs.
So I think, Vivek, just to be clear, the figure which you are talking about, which is the current maturities of debt, that has nothing to do with the vendor payable, which is all financial institution. And as you would have seen in our disclosure, actually the debt which is falling due for payment over the next 12 months is more like 30 billion rupees. The balance amount is largely reclassification of debt, which has a longer maturity, but this is reclassified because there are some breach of covenant where waiver has not been given explicitly by the lender. So from an accounting perspective, it has to be reclassified to current maturity. However, there is no likely action from any of the lenders to post those maturities. It is more an accounting reclassification than anything else.
Okay. Thank you for the clarification.
Thank you. The next question is from the line of Pranav Kshatriya from Edelweiss. Please go ahead.
Hi. Thanks for the opportunity. I just have one question. When you're talking about 5G, you talked about 5G ecosystem not being mature, and you will look at investing at an opportune time. Can you specify what would be the key factors what you will describe as that opportune time is there? Will that be something around number of 5G handsets versus proportion in the total handset shipment or something like that? What parameters you look at it?
So there's multiple elements to the ecosystem, right? So one, of course, is the actual network and the capabilities in the network itself. Many of those capabilities already exist, and as I said, we have deployed actually many of them, and in some cases already working within the 4G spectrum bands for us. And of course, it has been deployed across the world as well. And of course, there is the device ecosystem. important. I think this certainly for India is very, very important, given not only the price sensitivity of the devices themselves, but also the price sensitivity as well as the volumes that come. In India, of course, each service gets picked up at a large mass market, which certainly is very far away from where today, for example, 4G devices and their availability is concerned, as well as pricing is concerned. So I think that certainly will play a very important role. The other element, of course, is using spectrum, and while we can do many of the 5G technologies on existing spectrum bands that we have, the larger quantity of spectrum to get the real wideband service, we need most likely be in the 35 megahertz band, and that is something that is obviously not up for auction, and it's very expensive in our view from where we are in terms of pricing, but we believe is the right pricing. So obviously that is part of the ecosystem that has to develop as well. And then the last thing is when you say an ecosystem, it has to be sort of services and use cases for which 5G is needed and 5G is required, let's put it this way, and it cannot be done on existing technologies, so to say. And I think those are another area where there continues to be lack of clarity and lack of use cases which are, I would say, coming out clearly to say that these use cases require 5G technology and 5G spectrum. And those are not there worldwide as well. We're seeing that the biggest use case for 5G seems to be on adding capacity. So if you have capacity on 4G sites which are congested and you want to add more capacity, sometimes 5G spectrum is cheaper to add. Given the amount of spectrum that we have and certainly is available in the upcoming auction, we don't see the entire being a big problem in the Indian context. So hopefully that gives you an answer to your question.
It does give me an answer, but I mean, especially if I just probe in a bit on the last point, you talked about the application ecosystem or the use cases not being ready. But for whatever reason that has been the case globally, and still the companies have tended to add on to or rather hop onto the 5G bandwagon. So do you think that at some point of time you will be forced to get into it because the competition has already got into it? Can that be also a reason or a part of the situation?
It's very difficult to answer that question because we don't know what will happen in regards to what happens in the market and what competition is. What I am telling you is that from where we sit today and what I see as the ecosystem and what I see in the industry, the use cases and the ecosystem of 5G development in India is still a bit away. So I think what we hear and what we see today is more, let's say, talking points and to some extent, it's more something to talk about rather than actually real use cases. We don't see any of those developments. We have technology and has been around and deployed for a very long period of time. In our network, certainly many of these things running for a year, but without the ecosystem, those are irrelevant, and we continue to use them unfortunately. So I think it's very difficult to say what competition, of course, will do and how it will go. In many cases in the world where it has been deployed, there has been mostly to add capacity when 5G has become congested. And there, I think there is clearly a use case which is being deployed in several countries.
Sure. I'll just take one last question. One key component of the 5G is probably it's not really necessarily 5G, but one thing that's clearly coming out is RAN virtualization. And that clearly, I mean, although you might be ready on the core or the transport side, the RAN virtualization is not what everyone has done. What are the pushes and pulls when you are implementing a virtualized RAN solution in either a 4G or a 5G environment in terms of the CapEx basically?
It's a very complex and a detailed question. And I request that we potentially take this offline because it's not something that I didn't want to give you an answer which is not very clear, and what you're asking, I know, it's quite a complicated question in terms of the detail because it's not a straightforward answer to that.
Sure, no problem. Very, very useful. Thank you so much.
Thank you. Ladies and gentlemen, that's the last question. I now hand the conference over to Mr. Ravinder Takkar for his closing comments.
Thank you, Lizanne, and thank you all for your questions. So to conclude, I would say our strong focus on becoming the best 4G network in the country is yielding results which are reflected in not only the top rankings that we've received from several third-party reports. We are also starting to witness healthy trends across several subscriber metrics, with improving subscriber retention and good traction on our 4G and UL additions. We're making progress on our strategy. Our cost optimization efforts have already started to yield significant asset savings. Our additional fundraising process will help us achieve our strategic intent, and that continues to be put on our way. And hopefully, it will create a very strong competitive position for us in the market. Once again, thank you all for taking the time to join us for this call, and I look forward to talking to you many of you offline as well. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Vodafone Idea Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines. Thank you.